Hi, this is Bill Paulus, and I want to show you how you could have captured a couple of these major down moves, just massive down moves in stock symbol MBI. That's MBIA Incorporated. MBIA is, among other things, an insurer of bonds and various bond trading vehicles. And you can see here that it just absolutely collapsed, starting from a high in October around $68 all the way down to below $10 here in a matter of a few months. With Quantum Swing Trader, it was possible to capture this down leg here and this down leg there. Now, before I show you that, I want to just highlight a couple of things here. First of all, what I'm talking about is swing trading. This is where you look for high potential setups. You move into the market with the idea of getting out within a few days, sometimes as long as 2, 3 weeks, sometimes a little longer, but short term, very short term trading, where you get in at the right time, you protect your position with a fairly tight stop, and then you get out. And you get out in accordance with specific exit rules. That's very important. You never want to be making decisions in the heat of battle because you're likely to let your emotions lead you in the wrong direction. Now, what I just want to show you here before I get into the two trades you could have made with Quantum Swing Trader, had you just applied conventional technical analysis and looked at this major low right here as a point of support, and as the market chopped sideways and came on down, it should have bounced off of that support. Well, it did not. You can see it kind of hesitated here, but it just kept right on going. That would have been, right in here would have been the first sign to sell short using conventional technical analysis. And then likewise again, right in here, below this level of support right here, the market should have held right in here, at least for a while. It did not. It dropped right through. That would be a second area where using standard technical analysis, you could have gone short. The problem with shorting at these points is you have a hard time deciding where to put your stop. I mean, one way would be to put the stop all the way up here. Well, that's some kind of significant level of risk that I certainly wouldn't recommend taking. Likewise here, the logical point would have been maybe right there above that high, but that's quite a wide stop. Um, and so when you consider entering a trade, you got to consider at least two things. One is the potential the trade has to offer, but of course, the risk you're undertaking to try and capture that potential. Because certainly not every trade is going to turn out in your favor, and you need to protect yourself. Well, now then, with Quantum Swing Trader, on this particular stock, the signal to go short would have been right here, right in here. Much higher, a much better price than what the conventional analysis would have you do. And going short here, the stop would have been above the high, right in here. So a much tighter stop. And then following the Quantum Swing Trader exit strategy, you would have exited, you could have exited, you don't have to, but the textbook strategy is to exit 1/3 of your position with a quick profit, right about in there, and then trail a stop on the second half above the high of the last 2 days. If you look on down here, that did not occur until right in here. So you'd have been stopped out on the second leg of the trade right here, and the third leg of the trade, you protect it with a significant swing high, and that would have occurred right here. That's a significant swing high, and that would have been stopped out right there. So you'd have had a very quick profit, and then Another profit taking a couple of weeks, very significant, from 60 what $2 all the way down to $36. And then on the third leg, another significant profit. So second leg, third leg, first leg. And with Quantum Swing Trader, no matter what the market's doing, once you enter the trade according to the entry rules, you know exactly what to do each and every day you're in the trade because you're following these specific exit rules with no emotion, just letting the market tell you what to do. So you're out of the trade here now. The market chopped sideways and had another leg down. Well, Quantum Swing Trader could have got you in short right here, following the setup conditions and entry rules. Again, a much better price than conventional analysis would have gotten you in down here. And you'd place the stop above that high and then use the exit strategy to take you out. And again, the first third of the position would have been covered right around here, trailing the stop above the highest high of the last 2 days. Would have taken you out right in here. And by the way, when I say the last 2 days, I mean the last 2 days that are not an inside day. An inside day is one where the day before looks like that, and then the next day looks like that, where this would be the inside day right here, where the high is lower than the previous day's high and the low is higher than the previous day's low. Uh, for purposes of applying the exit strategy, you would ignore these inside days because I think one of those occurred right in here. And then on this, so that would have taken you out on the first leg right there at the profit target, on the second leg right here, and then the third leg above a significant swing high, which was right here. And that was just taken out right there. So again, relatively quick profit, and then following up on the other two legs, very nice profits. So with Quantum Swing Trader, with disciplined setup conditions, search criteria that allows you to find this stock in the first place, disciplined entry rules, and very specific exit strategy, of which I've shared some of that with you in this video. You could have captured these two big moves down, very significant. And while this is happening, the financial world is in turmoil because this company that insures relatively safe vehicle investments, or perceived to be safe, is in big trouble because of liquidity problems and unable to cover their insurance obligations. So while all that's going on, all that turmoil is going on, as a swing trader, you can take advantage of that. So if what I've said here makes any sense to you at all, which it should, I hope you'd like to take advantage of this knowledge, which is readily available in the Quantum Swing Trader course, presented in a very straightforward manner, supported by email support for any clarifying questions. And that would put you in a position to potentially take advantage of these kind of trades over and over again, with, very importantly, strict adherence to risk management rules, which are the cornerstone of any good trading method. So I would encourage you to click on the link below to get your copy of Quantum Swing Trader.